All right. So today was an interesting day. I had a 2 hour live trading challenge webinar in the morning and I didn't trade. Normally I like to do live trades so you can see my thought process, but I didn't see anything that great. Mainly what I spent my time doing was, really warning students against certain trades that they were taking. One student in particular, I don't want to be, too critical, but his name is Angry Pirate. He's been doing well, so he can accept a little constructive criticism. And he left a comment in the webinar saying that he was long PBMD here overnight at 3:15ish, thinking that it would morning spike today and he could sell into it. But in his comment, he said, pre-market it was trading around 290, 285. And it was trending against him. He had several thousand shares. He was down like 2 or 3 grand, and he was like, I think this goes to 250 today, so what do I do? And I'm like, why are you long a stock at 315 when you think a stock is going to 250? I know you want to try and sell into the quick morning spike because it's morning spiked here and it's morning spiked here, but both of those morning spikes have failed. So today's morning spike is fortunate. He got a little bit and he got out roughly break even. But I was very critical where, what if you don't get a morning spike? What if you get a morning panic? When a stock fails to morning spike, not once, but 2 days in a row, yeah, you might get a little one, but that opens the door, especially with this chart pattern. When this stock, remember, is still up from 60 cents, you could get a morning panic. He was fortunate to be able to get out. He was fortunate that, even though I didn't trade the stock, I was like, you have to get out like ASAP. And it changed his mindset on the stock. And for a lot of you guys, it's not about, having the right rules or the right patterns. It's mindset. If you think a stock is going to crash on a certain day, do not be long. Do not try and squeeze in, a little morning spike, a potential morning spike. When I was long PTBI, heading into today, and I sold after hours yesterday, but this had bottomed successfully. And every time it had bottomed in the past, like here, and if you go back even longer, every time it looks like it's bottoming and it starts uptrending, it can spike, and it can spike quickly. And today was no different. I should have held it overnight and I would have made, $1 a share. I didn't expect it to spike $1 a share. I just thought it could morning spike, 30 or 50 cents. I took like 15, 20 cents a share profit. I played it too safely. But my dip by, going into the close was because it has a nice safe base. PBMD does not have a safe base. When it opens up $1 a share and it loses it and it finishes red on the day, do not try and dip by that. And if you do pre-market when it's fading against you, take the 10 cent a share loss. As it turned out, it would have been like a 40 cent a share loss. So I basically saved the guy, 2 or 3, maybe even $4,000 by changing his mindset. And that's my whole goal. So I spent all this morning changing people's mindsets. And I think that's very useful, even though I like trading live. I didn't see anything that great. We had CERE, which is kind of this crappy stock, and, you could have bought it and made, $1 a share. GBSN, a lot of people wanted to short it here in the 370s, and I was warning them in 380s, and I was warning them, this can still spike. This can be a delayed morning spike, and that's exactly what happened. So a lot of people who were shorting, this fade from 4 to 370 because they're like, oh, it's only up on an analyst upgrade, it's not worth it. You get squeezed. And I don't like trading right at the open, especially on day one of a pattern. GBSN and CERE, today was day one. That's when they had their big spikes. I prefer trading day 2, day 3, day 4 of a pattern. And always remember, PBMD, a lot of people in a lot of chat rooms and newsletters are like, oh, look at me, I'm trading at the open, I'm buying it for the run-ups and I'm making 50 cents, or I'm shorting it for the rundown and I'm making 30, 50 cents. You have to be very, very careful. Remember that most chat rooms, most newsletters, most students, most everybody on social media and in message boards lies about their results. If you look at academic study after study, 90 to 95% of traders lose money. And, if you remember, if you were in my chat room or any of the other big chat rooms right here, pretty much everybody was shorting PBMD. And, I missed tons of plays, and I'm not afraid to miss another play. But what I do know is safety. And in the past few years, I've really clamp down on my risky trading. And I warned my entire chat room, do not be shorting this here in the 260s. Yes, it was up from 80 cents. And if you scroll down, scroll back even more, it's actually up from, 50 cents. So everyone thought that this was a gift. It's up 500%. It's up 5 times. This is great. And they loaded up. And I said, no, this can still squeeze. And this is the danger of shorting morning spikes. And, I know traders great and small in my chat room and other chat rooms. You can ignore my rules. You can ignore my patterns anytime you want. I'm not all-knowing. I'm not always right. But I do play it safe. And I will pretty much always show you the safest option. And the safest option here was not to short it, but it was actually to buy it. But again, I did not want to buy it because I knew how many subscribers were short. And I don't like trading against you. I'm not going to be like, oh, my whole chat room's short. Let me buy it. Like some traders are doing. I don't want you to lose money. I don't want you to feel like I'm trading against you. So the only option available to me here was to warn against shorting it, which I did. And I protected people who listened to me. And sadly, some traders in other chat rooms and other newsletters all over the web, everyone who thought that it was a gift to find shares to short here in the low twos got crushed. And I cannot bring this up enough times because while everybody else wants to sweep it under the rug and be like, oh, that was last week, it doesn't matter anymore. There are traders out there who have lost 10, 20, 30, 40, 50, 60, 70, 80%, sometimes 90% of their accounts on this play. And they're going to try and come back and they're going to try and partake in the same scalping right at the market open or near the market open. And they're going to try and use that volatility and they're going to try and grow their account. And maybe they will be successful for a little while. But all it takes is one of these things to wipe you out or to, crush your account and your confidence enough so that you're out of the game. And I don't want it to happen to you. You can call me a coward. Many people do, but you will not see me get crushed. And that is something that I am very proud to teach. So that's pretty much what I did all morning long. I wanted to trade, but I just wanted to protect my students. Angry Pirate, who was long this, and he thought that the stock was going to crash. So I had to really kind of chastise him. Like, when you think a stock is going to crash on the day, do not try to beat the odds and beat the pattern for a little bit. So that was this morning. I was always still looking for trades. Even though I wasn't trading PBMD or CERE or GBSN, I was still on the lookout. And midday, I saw CHGG. And normally I don't trade midday, but this had just broken the day high. This is how I found it, stockstotrade.com. I know we're in the process of getting to Stocks to Trade version 2, and it just began working on Max. So bear with us. If you're interested in Stocks to Trade, send an email, admin@timothysykes.com. But I saw that it broke the day high right here at around 1:15 p.m. and it was above 775. And this is not a chart that I normally want to buy, but if you look at the daily chart, it gets a little more interesting because remember, this is an earnings winner. You see this big spike, they had good earnings, and then they had another good update here. So you have a clear top here in the high 8s, and it's not a very volatile stock, but I like dip buying earnings winners when there looks to be support. PTBI was not an earnings winner, but it was a billionaire play. And, you had a dip buy and then it spiked, dip buy and then it spiked, dip buy and then it spiked. So when you can dip buy these kinds of range bound stocks, it's not a bad idea. And this one, had support, when it really broke out, it broke out past this 745 and then it had support here at 770. It dropped a little bit down to 725 here, but then it went right back. And now when it broke the day high today at 775, I started thinking, wait, now maybe 760 is support. 760 was support here. 760 was where it started the gap up. 760 is here. So I'm going to draw a line and say 760, 765 is support. So I bought it at 780-ish. After hours right now, it's at 784. It never really touched 8 today. I don't know what that tick is. But I'm dip buying it roughly 10, 15 cents a share away from support. So if for some reason I'm wrong, I can lose 10, 15 cents, no different than my PTBI trade. But if I'm right, this earnings winner, it's been getting crushed off its highs the past few days, mainly because the whole stock market has been getting crushed too, or at least NASDAQ plays. This can easily rebound to 8 or maybe even 8. There's going to be resistance at 820. So there's not more than like 40 or 50 cents of upside from my buy, but there's not more than 10 or 15 cents of downside. So there's still 2 or 3 to 1 risk reward, and I like dip buying earnings winners, so I'm going to give this one time. The same kind of thought process made me bank on OHGI. This one had the big spike. It spiked several times in the past now, and it's all related to when they announce updates about their Ashuo app, which is kind of like a WhatsApp or a Skype, and they have this like next generation messaging. And I held it for months. I mean, I'm bitter with this stock because I held it for months here in the 180s, 170s, and then for some reason it tanked out of the blue here. I had to cut my losses in the 130s, and that was my biggest long-term loss of a little over $5,000. And then sure enough, we got the exact announcement that I had been waiting months for, and the thing doubled. Coulda, woulda, shoulda been a $15,000 profit for me. Unfortunately, it didn't work out, but I was on the right track, and I was on the right track that their announcement would spike the stock. And so I'm always looking for more announcements, because every single time that this company teases an announcement or has an announcement, it can spike. And what this stock did today, I bought it in the 170s, mainly just because it was already up. It was already a percent gainer. It was already up 15% on the day. They had, and if you look at the alert that I issued, they had mentioned in the what is it? I don't even remember what kind of SEC filing. They had an SEC filing saying that they're going to have a presentation tomorrow at the conference. And if you look at the alert, I also linked, I did a simple Google search for the conference, and you can see that they're presenting tomorrow, at 10:30 or 11 a.m. Eastern. So you have a clear and definitive new investor presentation, and it's basically, cheerleading, talking about how great their solution is. But the point is that we know that they're presenting at a specific point in time, and we can look forward to them trying to hype themselves up. So it makes sense to buy this ahead of it. It's kind of like buying, a stock that announces that they're going to be on TV. So while they might not have the worldwide exposure that a TV audience would give them, they're presenting at a conference with a ton of other small companies, and every time they have an announcement, it spikes. So it would go to reason that this could spike. So my buying it in the 170s, 180-ish, I thought that it could get back to 2. I didn't know that it would already get back to 2 and actually touch 225. But this is how fast this stock can spike. And the key to being successful on this kind of a play is not to follow any alert, and you should never follow any alert, but it's to see the trade before me. And, I wasn't the first to spot this. Several people in the chat room were like, hey, OHGI has a new investor presentation. But they didn't connect the dots that this new investor presentation, if you read it, you would see that they're presenting at a conference, and then all you had to do was Google the Markham conference, and you would see that they're presenting tomorrow. So there's no risk of, there's not much risk. There's always risk that news can come out at any time, but there's not much risk that there's going to be any negative news ahead of their presentation. Most likely they'll try and issue something positive or nothing at all, and maybe they'll try and hype themselves up during the presentation. I will not be holding this stock into their presentation past 10:30 a.m. Eastern. My whole goal was to dip buy this and sell into the anticipation of a potential spike, and that's exactly what happened. Several other newsletters and chat rooms piggybacked my research. Any one of you could have figured this out before me. Any one of you could have bought. Any one of you could have posted, on Twitter or whatever in the chat room that they're presenting tomorrow. And in the past, when they've had announcements regarding their app, the thing has spiked. So I don't know if this goes to 250 or 3 or maybe 225 is the high. But my buy in the 170s was nice and safe, because if I was wrong, there would be maybe 10 or 15 cents in downside. That's what it was up already on the day. And I would just cut my losses. But if I was right that it could run, which I was, there was already, 50 cents of upside. So this is the kind of plays that, I want you to get excited about. Why am I buying this stock? In anticipation of news. Why am I buying GLUU? In anticipation of the chart bottoming. Why did I buy PTBI? In anticipation of a morning spike. So I have very specific purposes when I buy these stocks. It's not just random. It's not because I think any of them are quality companies. I'm trying to anticipate what's going to happen next in the chart. And the way that I do that is by studying thousands and having experienced thousands of charts like these in the past. So that's why, some people are like, oh, you didn't trade that. You say you're on the right track. You're full of crap. It doesn't matter. No, when I'm on the right track, that means that I'm going to use that same logic for other plays because I had the right idea. Like when I bought Momo several times in the 16s and it's now in the 19s. Even though I sold it too soon both times, I had the right idea. When I bought PTBI at 360 and it went to 11, I sold too soon, but I had the right idea. VLTC, when I was buying it in the 2s and it went to 20, I had the right idea. I don't see exactly how far any of these stocks are going to spike, but the downside, if I'm wrong, is always just 10, 15, 20 cents a share since I'm willing to cut losses quickly. And the upside on all of these is substantial given the catalyst and given the news. OHGI has proven that it can run a lot very fast. So do not chase this and always be looking to sell into spikes. But when it starts dipping and you have news coming tomorrow one way or the other, shorts are going to get scared. Momentum traders are going to get jumpy. And it's a good dip buying opportunity. Same thing with Chegg. This is not a volatile stock, so I'm up a few cents a share. I don't care about it. The question is, will this, kind of chart bottom hold this first green day after several red days on an earnings winner? I don't know the answer. Any trade can go against me. Any trade can go against you. But if you choose trades where the indicators are in your favor, then the odds are in your favor. And the upside on Chegg is roughly 40, 50 cents versus the downside of 10 or 15 cents. OHGI, if I was wrong, the downside was 10 or 15 cents. The upside so far has been 50 cents. So it's already proven to be, the right trade. And that's how I choose trades. If you're just trading random stocks with random patterns in the morning, it's very difficult to quantify what is the risk, because if a stock that you're buying does not break out, it's very difficult sometimes to lose just 10 or 15 cents a share. Or if you're shorting a stock and it does not break down near the open, it's very difficult to only lose 10 or 15 cents. So I choose more boring setups, but I understand my risk, and that is why I do not blow up. That is why I have the most consistent track record around, and that is why I have, frankly, millionaire students where nobody else does. There's a lot of people who play the momentum of penny stocks, and it's very fun, and they love it, and they brag about when they win, and then they try and hide the fact when they lose. But this is how I made my millions, and this is how I will create more millionaire students. So we'll see how Chegg does. We'll see how OHGI does, but I wanted to show you the framework of how I choose my trades. It's not random. It's not just buy, 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 or short, short, short. It's very meticulous, and my entry prices are very meticulous. So I would not buy Chegg if it goes up to $8, because then the risk reward is different. The upside would only be 20 cents and the downside would be 30 cents. I would not buy OHGI here in the 2s, because the upside may be 20 cents, the downside is 20 or 30 cents. So it's 1-to-1 risk reward. I dip buy these stocks at very specific, very meticulous prices. So when I say that in alert, like do not chase, don't follow, I bought this at a very specific price, that's what I mean. Every single trade for me, it's not just about how much can I make, it's about how much can I make versus what is the risk if I'm wrong, how much can I lose. And when I'm dip buying these plays, I always have a very specific exit point where I'm buying a stock near support. Sometimes the stock will drop too quickly and I won't be able to cut losses of 10 or 15 cents. But most of the time, I'll be okay, because if you're dip buying a stock, it's not like chasing a stock. That's why I don't buy stocks like CERE or GBSN, not because you can't make money, but because you can't quantify the risk. Not to mention, sometimes these stocks move so fast by the time you even get the freaking alert, the thing has moved 20, 30, 40, 50 cents, and it's time for me to sell. OHGI was a quick one. I didn't expect it to move so quick, but That's what happens when several chat rooms and newsletters piggyback your trade. Chegg, I kind of like it better because even though I won't make as much and it's more boring, you can see exactly how it plays out over time, and we'll see if I have the right idea of dip buying earnings winners near support. So it's better for educational purposes. So remember, I trade with a very small account with less than 1% of my net worth, not just for trading profits, but for education. Every single trade I do, good or bad, hopefully gives you a little better sense of how to frame your own trades. I want you to be able to plan your own trades on your own before you even put money in. So when you buy OHGI or Chegg or short or do whatever you want, go in with a plan. Say, okay, I think that there's 50 cents I can potentially make long or short, and the risk is me losing 10 or 15 cents. That way you have a nice safe structure when you make your trade, rather than most of the traders who trade these momentum plays who don't have a plan. They follow some chat room, they follow some alert, they're buying or shorting based on gut. Having a plan and being meticulous with cutting losses will save you, and it will make you rich if you follow it. Thank you. I'll see you in the chat room tomorrow, guys. Have a good one. My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.